Good day, everyone, and welcome to today's TD Markets 2026 Market Outlook. We're excited to have you with us as we break down what's really driving the market right now. Joining me today is our incredible team of specialists, each bringing a unique lens to the global market landscape. Firstly, we have Ashley and Sepo, who are our training educators.
Good to be here, man. Good to be here.
Yeah. Glad to have you with us. Next, we have Brandon, our OTC and crypto market specialist. Welcome, Brandon.
Thank you, Tabang. Nice to be here, my buddy.
Awesome.
And happy Tuesday.
Followed by Xander, who is our head of sales as well as our key individuals.
Thanks for having us.
Yeah.
I think it's the glasses, guys, for the record.
For the record, welcome to the Five Blind Men podcast, looking at the markets for 2026.
2026. For the record, he doesn't need spectacles, guys.
I don't. I just wanted to fit in.
Well, thank you all for being here. Let's jump right in. Okay. Let's get a tone from the macro environment. So now, 2026 kicked off with massive moves in the market, with tension rising in the geopolitical sphere, as well as no shortage of volatility across different asset classes. So, Ashley, from your perspective, what's been the dominant driver so far, and what sort of market environment are we heading into for 2026?
I think well, firstly, guys, it's good to be with you in this one session. It's great to have all these great minds around to chat about what's happening. I think our conversations just prior is really going to speak a lot during our interaction. I think we had reached some form of consensus that politically, off the bat, it was insane. Maybe just to, I think insane
And
might
Davos.
be, it was a bit, yeah. So from a political standpoint, the first thing that I mentioned here is Venezuela. Trump goes in, takes hold, and then says we open for business.
Unofficially becoming the president of Venezuela.
Officially. And that was a very interesting thing. I don't think, have you guys seen anything like that legally, historically, past 5 to 10 years?
I don't think we've seen that since Nazi Germany invaded Poland in 1939, you know?
So he comes off the bat, right?
Yeah.
B? And I think XU actually asked when his first 100 days was up, and we saw it was April last year. So he comes out swinging. He's elected, and he comes out swinging. I'm taking over. That's the first one, politically.
Yeah.
Secondly, Greenland, giving an ultimatum, all right? And then obviously the tariff crisis, I think X will actually share on that as well. Just hitting guys with so many tariffs from an unprecedented angle.
It's not necessarily just like the tariffs, it's the inconsistency with his statements and how quickly he changes his minds on things. That's the big driver that's been driving the market.
Yeah.
We saw particularly like with how gold is pushed up with this uncertainty with Venezuela,
Yes.
Iran, Greenland, all of these things sort of caused this uncertainty factor. And we saw gold push up to
5,000.
5,600 over this for pretty much like a month, right?
Yeah, and silver hit at 102, 105, also hit over the $100 mark. But maybe just to come back to the tail end of what you were asking there about the markets, I think right now, from a metals angle, commodities, we're seeing gold, we're seeing silver, platinum, all these guys have pushed up, and we're seeing a weaker dollar at this point in time. Remember, we're not looking at it long, 15, 20 years from now. We're saying right now the dollar is weak.
Well, I think also let's just prefix this podcast quickly so that people know what day we're talking on, what's happened in the markets. I mean, we are sitting here on the 3rd of February, 2026. So as of today, we've seen gold hit these all-time highs, silver hit these all-time highs, but we've also seen a 26% drawdown now over the past couple of days.
Correct.
We've also seen Bitcoin go down by 12% over the past, or the year to date so far. So let's just give the audience an overview in terms of where we're sitting right now in the markets, why we've seen these drawdowns, why we've seen these highs, and then maybe, how that could look like for the rest of 2026 from a crypto and from a FX perspective,
And also, I just want to add on that, you mentioned one of your first points there. In line with that, I think I read an article one time where it says there are a part of the Republicans that are not for Trump's policies. You know, with the points that you gave there, that's where my mind went to, right? The Republican Party, is it for Trump or against Trump with all of these policies? And it's going to be interesting to see how they just navigate around what Trump is doing at the moment.
I think also about a week ago, we played a little clip in one of our meetings, and Trump was so relaxed about a weaker dollar. And we see that happen now. And one needs to ask, to loop Brandon's point in there, yes, we're seeing gold come down. It's already recovered. Right. Back up to 4.9. So
steadily so, yeah.
Steadily so, right? So that movement.
The ironic part with the steadily so is like it's still $400 in the course of 2 days from gold. It's crazy numbers. Just to recap on like what happened on Thursday, we saw like a sell-off of about $400 happening in an hour's time. 10% of the value lost in an hour. And then come to the open of the market yesterday, we slumped down to like 4,600, give or take.
Yeah.
It's like in 2 days' time, like so much value, like $1,000 lost in notional, or not notional value, but $1,000 on gold as the price dropped down from 5,600 down to like 4,600 in 2 days. It's crazy, crazy movement.
And Brandon, we also saw the same basically movement with Bitcoin as well.
But that's very interesting that you mentioned that, because I wanted to mention it this afternoon. Is, you know, we've never really had somewhat of a correlation between the commodities market and Bitcoin, or the forex market and Bitcoin.
Stocks.
But I think what has been true, especially within this political uncertainty geopolitically, is that we are seeing correlation now between these assets. So I'm not saying it's a long-term thing, or there's going to be a fixed correlation now.
But there is something there.
Yes. But now with US dollar price going down, commodities going down, Bitcoin going down, that's nice to see that correlation.
Yes, actually.
You know?
I agree with you 1,000%.
And honestly, I wouldn't be surprised with the steady rise that we're seeing again, that with the price of Bitcoin being so low, that a lot of these institutional players, which is a whole other topic of conversation, will start putting more inflows into
to give
Bitcoin.
the support that's needed for that specific rise,
Yeah.
And also, just to touch on a point that Ashley just mentioned with the drop in the price, the USD basically. Xander, do you think that this is intentional? Is this a US strategy?
Oh yeah, 100%. So, and I think it comes down to like the whole Trump coming into power, this whole facet that he has with regards to the tariffs and being able to manufacture and make America great again. For them to really export properly and export at the cheapest available price, they need to bring down the currency as low as possible. And that's one of the reasons why South Africa's always been, our rand has always been weak, is because our exports of our commodities, which is predominantly like our biggest sector in South Africa, because of our weaker currency, we can export and get our commodities out of the country so much cheaper.
But let's not bring it to South African politics, because we can say, why are we exporting our raw materials and then buying it back at 3 times the price?
Sure.
But
100%. But it comes down to like, if he wants to manufacture inside the US, which is what he's pushing towards, and this is why all this tariffs is in place.
Exactly.
He wants the dollar to be as low as possible. And this is essentially where they are heading. It's not going to be like a smooth ride, and but I do think like at the end of the day, this will need follow through from the next 2 presidents at least coming into power after Trump.
If they obviously agree with him, right? They obviously agree.
Otherwise, all of this is for a waste.
Is a waste.
All of this is a waste.
Just to comment on the gold push to the downside, 11,000 points in the past 4 days. 3 days, 11,000 points. It's a lot.
There's extreme volatility there. Right?
Yeah, the range. It is, from 5.6 x to your point to about 4.4. It's massive.
it is massive.
It's massive.
But guys made a lot of profits in that time, and maybe it was time to liquidate, to have a somewhat of a reset, because how long could those levels continue to rise and rise and rise?
But that was actually I pulled about 5 analysts' views, and they said the profit taking is exactly the psychological high above the 5,000. Where people started saying, listen here, it's a high. Now we know structurally, when price reaches a high on the structure, there will be a correction. When it happens, we need to look at it. You mentioned something powerful a couple of minutes ago. You said we saw this drop a month ago already, but it didn't happen. But it reached that high. It went aggressively so above the 5K, and then it comes down. And so part of the profit taking, according to these five analysts, that was part of the drop, and why it was so sharp. 11,000 points later.
So, like, an interesting thing is, like, I keep tabs on the COT report every time it comes out on a weekly basis. On the 20th, which was the previous, so it was on the 27th the last COT report came in, but before that, it was on the 20th. We could see, like, on the 20th, there's a lot of money managers started scaling out a bit on the 20th. The COT report that came out on Thursday last week was just insane. Like, the amount of liquidations that happened, just from a money management perspective, from a producer's perspective, there's so much profit taking that just took place. When the drop happened in their first hour, my first sort of instinct was like, what happened? I couldn't pick up anything. So subsequently, obviously, the COT report sort of lags with about a week. But there's so much profit taking that took place. So there's no fundamental news to push down the price. So it's more than likely still set to recover. Just because there's no physical reason why.
Yeah.
But that's why. Is the institutional manipulation? I mean, we can get into conspiracy theories now, but like...
The five blind men to the conspiracy.
But surely that is manipulation right there. There was no reason for gold to have an 11,000 point reduction within that time.
The big thing though is, like, then do you just consider if you make money on a trade and you close it? Does there have to be a reason for that?
Exactly, that would be, exactly.
You know what I mean?
But then Trump, wouldn't you say he's manipulating it in real time in front of everybody? Because there doesn't need to be any back-end manipulation. He's doing it in front of everybody, saying...
On X.
He's like, listen, tariffs, I want Greenland, or... Exactly. So, from a manipulation perspective, you could be doing it right here, in plain sight.
All right. So let's expand on the volatility and risk appetite. Now, also let's touch base with Jerome Powell, especially more targeted in terms of volatility and risk.
Uncle Jay.
Yeah, with him now being subpoenaed.
Yeah, which is also a very interesting one, right, brother? The subpoenaing of Powell.
Yes. How significant?
Does it not give you that feeling of Hillary Clinton's emails?
What I wanted to know is how significantly will the Federal Reserve rate cuts influence the risk appetite across, let's talk about Forex, indices, and crypto, and where do we see opportunities for retail investors as well?
Okay, so let me just make something clear before the real FX experts get into this. The Fed is meant to sit completely independent of White House. Why? Because they are in charge of policy from a government perspective. The Fed is there to institute fiscal policy and make sure that the economy stabilizes, that there's growth, that inflation doesn't absolutely go hyperbolic, and that we have some kind of stability. There is meant to be this separation. Right. Just like here in South Africa, we have the separation between government and the South African Reserve Bank. We need that separation.
That's the blueprint.
That is the blueprint.
That's the template.
Yeah. But I think what Daddy Orange has now done, but he is now trying to just influence all spheres right now. And I think what has been nice about seeing the backlash around the subpoena is that the public is pushing back to say, listen, stay in your lane. Remember that the Fed is actually there to guide the economy, and that's far more important than Trump's own personal agenda. So, I just wanted to prefix that before we actually get into the subpoena itself.
Can I just add to that? So also, Jerome Powell said this to him in a very indirect way as well. He didn't necessarily say it indirectly. Trump, stop what you're doing. Listen, this, and that. He said it indirectly. The Fed does this. The Fed does that. And Trump just didn't listen. He just didn't listen. So,
yeah, I think there's multiple moving parts to this. You've got the subpoena as a result of political pressure. You said the Fed has to be independent, but not with Trump. Not with Trump. And then you've got the topic where we've got interest rates now, right? So maybe just to jump in on that, then we'll expand it. Well, you look at FX where lower interest rates generally weakens that currency. I'm gonna make an example with the dollar, right? So the dollar would be weak, and that generally it boosts risk appetite, right? So the increase, or rather this increases the supply of the dollar as a result of weaker or lower interest rates, and the cost of borrowing becomes cheaper, right?
Yeah.
Because the dollar is less attractive. So that now motivates investors to try and borrow from your low rate currencies into the high yielding ones, right?
So like the Japanese yen or the
Like the
Australian
safe
dollar.
havens,
Yeah.
Simple breaking down the carry trade now.
But this is great.
He actually is, bro. The Japanese, you break down the carry trade, bro.
And then if us across FX and indices and crypto is, and maybe you will also jump in there, crypto is a high risk, cryptocurrency is a high risk assets, right? Which is sensitive to rate cuts, right? So this signal of low interest rates, what generally does, what I've seen through history is that it what's this word? I lost this word, man, but it provides access to more funds and draws capital from your traditional FX or traditional assets to crypto for potential high returns.
Yeah,
So,
so
but can
move
I
money from
rebuttal?
there to there.
Yeah,
Sure,
but I just want to rebuttal on this.
Yeah.
So what low interest rates does is essentially makes acquiring debt cheaper,
Yeah.
Funding
which
available.
is
yeah.
already the major problem in the US right now,
Yes.
sitting on $37 trillion worth of debt,
Debt, yes.
which is spiraling them right now as we
Lots of
speak.
countries have the issue with that. That's
Yes.
the issues they have with the US, the debt.
That is the major issue,
Yeah,
is debt.
it's debt.
So should we not look at potentially, I'm going to throw a curveball into the equation, but look at increasing interest rates so that these financial institutions stop borrowing so much money? And if we had to look at a perfect, circular economy of crypto where fiat money didn't exist, the thing with digital assets like Bitcoin is I can't borrow more Bitcoin than
Yes.
that's in the
It's
total
capped, yeah,
supply.
it's capped at supply.
It's
yeah.
capped, right? So intrinsically, it's a true representation of what currency could be. So that's why I just want to throw a rebuttal back. And why are they trying to push interest rates down? Where surely to solve the debt crisis, they would want to push interest rates up.
Like an interesting sort of a thing of what you just said, especially when it comes to the debt. China has a lot of the debt, right? The US currency is getting a lot weaker. So it means their debt is naturally getting cheaper.
He's the economist, guys. This is the economist.
Qualified,
Qualified.
degreed economist.
So like that's one of the interesting points to what he's doing now at the moment as well. Because the lower you can get the dollar, the cheaper their debt becomes and the cheaper their repayment becomes as well. So the interesting point though is that Trump sort of went and pushed his sort of a Fed nomination out there. Seppo did a bit of research on him as well we can touch base on. But I still see like a lot of interest rates cuts happening this year.
Yeah.
Then the sort of a point I want to get to on why is because of all the tariffs, and he's pushing to get a lot more manufacturing happening inside the US and everything to make everything great in the US and US manufactured. The fact with that is like it's also going to increase the inflation quite a lot as well. Because with how more expensive things are going, it's going to increase the inflation.
Yes.
For them to keep inflation in check, they'll have to start cutting.
Yes.
I at least see at least 3 cuts happening during the course of the year.
Really?
So we
Really?
might get it down to like about, we're sitting on about 3.5 at the moment. So I think about 2.7 slash.
I thought it would be
come in the middle.
2 cuts, one now and one later the year.
I don't think so. I think we should get a cut happening end of the first quarter, end of second quarter, end of third quarter.
Wow. Okay.
Currently, we're sitting on, I think it's 3.75%. Maybe you'll just verify that.
Yeah, verify.
But I think you're right. I think it's the cutting season. And with the new Fed chair now, is going to assume the position in May, I think. Right? He's hawkish.
What's his name? Just so that the viewers know.
Kevin Wash.
Kevin Wash, yeah.
I don't know Wash with the RSH. With the R, yeah.
It's a range there, brother.
Anyway,
3.5,
Wash.
3.75.
3.75.
Yeah.
Yeah, Wash, Kevin Wash, right? I mean, according to my research, he was the youngest to be in the board of governors in 2011 or 2010, there, somewhere there. And I think Trump has been a big fan of him. All right, so yeah.
Yeah, you're making me laugh because after you want to look back to Brandon's point there.
Sure. So yeah, he's hawkish. I mean, he's pro crypto. He's been praising crypto. So we're trying to see what he's gonna do now with the next Fed meeting and how he's gonna approach everything. Yeah.
after you mentioned that, obviously I chuckled.
Yeah.
Going back to Brendan's point, Trump likes him. Trump brings him.
Yeah.
Trump positions him. So those cuts, that
Yeah.
manipulation that you mentioned just now,
Definitely, those cuts are definitely going to happen.
in plain sight,
Yeah.
brothers. Plain sight.
Definitely going to happen.
That's
So-
a gem right there.
Plain sight. And pro crypto.
But what does that translate to then? Does that translate to guaranteed rate cuts then? Because that's clearly what he's been pushing for. So what does that look like then from a retail investor perspective with these almost, I'm not going to say guaranteed, but I will say
More than likely to.
99.8% surety that rates will be cut this year. We don't know how many, but we'll have one.
Remember, there's also 12 Fed chair governors
Yeah,
that needs
12
to
of
vote.
them, yeah.
Sure, yeah.
So
yeah.
he might be an influence in it, but like it's still going to come down to the majority votes of those governors. So it's not necessarily going to be that this guy comes in and there's just going to be cutting happening profusely.
X, would you agree that Trump got power out?
So what?
That he got power out?
Again, Hillary emails.
Sure.
Well, he did look like a hostage. You know?
You see, I saw a clip them standing next to each other, and Trump takes out like a
Yeah,
paper and says,
like a paper.
"Cut is due." or something like that. Powell says, he looks at it, he's like, "No, we have to." He goes on
You
on
know,
the Fed stance. you know?
Basically, it was like, if you're not going to give me a cut, I'm going to cut you.
I'm gonna cut you. I'm gonna cut you.
I'm going to cut you. Finished.
I think there's a cut coming up.
Yeah, and back to Xander's point, so there are 12 officials, right? And with Jerome Powell, they've been on that wait and see, like they've been data dependent, right? So yes, he's going to come in, have the influence, but the majority, they are data dependent. They've got their own projections and so forth and so on.
100%. Like if you look at was it last week's FOMC meeting?
Yes.
The vote was 10 and 2.
Yes.
2 wanted to cut, 10 didn't want to cut. So I think if you get the Fed chair being Trump's new elected Fed chair, you're going to sit in a position where he might be able to influence more. So it's still going to come down to where the majority vote sits, but how he sort of moves and, let's say, manipulates the votes.
Yeah.
10 and 2, you're right.
Yeah.
So, sorry, I just want to circle back to my point that I made. Well, the question that I posed was, what does that mean then for the retail investor with these guaranteed rate cuts happening this year? Just for the audience out there to, have some kind of
Go long the NASDAQ.
go long on
Long
NASDAQ,
in the NASDAQ, basically.
go long on BTC. Can I say that too?
So, like, if you're getting, like, more of a cut, like you said, like, you're going to get, like, cheaper borrowing.
Yeah.
Number one, that's going to mean, like, there's going to be more economic growth because corporates can borrow cheaper.
Yes.
Because they can borrow cheaper, they can expand a lot more. That
Yes.
should give you more of economic growth. So I don't necessarily see that where the indices or the US indices will particularly not fall down.
Yeah.
Yeah.
Except if there's more geopolitical events happening, which more than likely there will be.
Yeah, you're right, because also lower rate cuts, what it does is that it boosts profit projection for these companies, because they borrow at a lower cost.
Yeah.
Yeah.
Also, on those indices, the last 4 weeks, they've just been at the same high.
Yeah.
Same high. It's like they're pausing, they're waiting for
They're
the
waiting
next
for that
directive. They're waiting for the cut.
If
The
they
moment-
cut last week, it would have been gone.
Exactly. And then from a BTC crypto, that's the word I got there was explosion. So when those cuts come, it's explosive.
So
But
this
that's
is the
why.
deep breath
Yeah.
before the plunge.
Okay.
Yeah, it's like, yeah.
And this is the reset because
Yeah,
remember,
I
a lot of
actually
these
like
big
that word.
players
Yeah.
still want to acquire BTC and other crypto assets at far lower prices than what they've been traded at.
Yeah.
So, this is the point that I wanted to make in terms of what's happening within the crypto markets for 2026, which is, institutional capital is not entering the market, right? It's entered. It's reshaping
it's there.
it.
Yeah, it's floating. Yeah.
It's there.
Yeah.
And I think from a retail perspective, we need a lot more data. Just like, the FX markets have been around now for more than 100 years.
Correct, bro.
There's historical data which people from a retail perspective can gauge upon and then make more informed decisions. Where that data in the crypto cycles and the side of things hasn't been around.
But limited,
But experts like Rand Crypto would say that we have entered into the bear market now. That BTC could potentially go down to as low as 35,000 per Bitcoin.
There's no. I agree.
I
35
agree.
is very low.
Yeah, it's very low.
Yeah, it's too low.
I don't think so.
Yeah.
So from your perspective, where do you think the floor of Bitcoin is?
Well, if we're talking about 2026 specifically, some analysts say that it could go down to as low as 35. Some say it could go down to 58. But I personally, in my own personal opinion, I don't think it's going to cross lower than the all-time high that we had in 2021, which was around the 68, 69 mark.
Correct.
But that's really where I see it going, as low as that. But I think this is still a good enough price now, if I say that. When I say a good enough price for institutional players to warrant, getting into Bitcoin now, even if guys haven't had exposure before, and we'll see that now as we get into more of the data in terms of ETF inflows. But that's really where I think the floor is. And you know what the thing is with, as you mentioned, before we got onto set about, how gold can never essentially go to zero. Oil can never go to zero, or though it's already gone negative in the past.
Yeah, that's future.
But
it's not necessarily like a
Yeah,
physical
yeah,
thing,
not really. But, Bitcoin is warranted on how much am I willing to pay for it? Between me and you, peer-to-peer, going back to the fundamentals of why Satoshi created Bitcoin in the first place. Pure peer-to-peer exchange to transfer value. But, Tips, I know that you've come onto this Bitcoin wave and you're really enjoying the space, but I'm sure that you can also add on to where we see those flaws and what we're seeing, the trading data around Bitcoin, maybe from an institutional perspective or from a retail perspective.
Yeah, so I think it's important that in line with that, we understand, yes, institutions. We also try and understand the OG whales. The whales are also playing a part in what Bitcoin is doing right now.
100%.
And then you've got a few indicators, of course, your net flows, your Bitcoin dominance, your fear and greed index, So there's been a lot of outflows from both BTC and ETF. There's been just a few inflows there, but the majority, there's been a lot of outflows.
Fear and greed index is sitting on 29,
Exactly.
bro.
So
29.
there's fear right now. There's fear right now, right? And then you've got the altcoin season index also that's sitting, 27, I think, also somewhere there, right? But looking at the inflows, the banks are buying, major institutions are buying, your MicroStrategies, they're buying, and so forth and so on.
Vanguard.
The Vanguard is buying, right? They're expanding their reserve, but price is still going down.
562 million, just so you know.
Yeah.
Flows.
Yeah.
About 562 on the 2nd of Feb.
Just to shout out, but that's that video that I did the other day, telling the people about Vanguard buying. Well, they bought MicroStrategy shares, which allows them to get exposure to Bitcoin.
Do that,
Because
okay.
remember, still now with, I think that's also where we're going in 2026, is we will have clear regulation, not only in the US, but we've got that regulation already in Europe. But I think it's going to be really drilled in now this year.
More
That's what I'm
robust.
trying to. Yeah, it's more robust.
It's going to be more. Yeah.
And I think guys are responding. Companies are responding to that now, and actually, institutions are not killing innovation. If anything, it's just going to allow capital to flow into them to actually let innovation flourish. But going back to where we're seeing these inflows coming from, it's the indirect inflows.
Okay.
But that's what I'm saying, is guys can't hold Bitcoin directly on their balance sheet. But if you buy an ETF or if you buy MicroStrategy shares, their whole focus is Bitcoin and only Bitcoin. But did you know now with this, 40% drawdown that we've had since the peak of 2025, it's the first time that MicroStrategy is in the red.
Yeah. Well, they said that even if they're going to be in the red, they're not too concerned, right? But
I also wouldn't be. If I'm Michael Saylor, I'm chilling right now.
Yeah.
Yeah. Okay, so let's actually start looking ahead, right?
All right.
I'd buy more, actually.
Let's
So,
actually talk about what's coming in the future. Let's look towards the future.
I think we just started it, but yeah.
Yeah. So let's see. What's the one key factor or event that traders should actually be watching? How might this ripple across all of the different sectors and markets?
I think from my side, I think tariffs is still the main sort of focal point. And whatever Trump is saying, that's where you're sort of leaning towards, right? But like Ash and I spoke about earlier, there's a lot that he's been doing.
Yeah.
We just don't know why specifically.
Yes.
So I'm pretty sure we'll get through those reasons as we sort of go through this year. But I think paying close attention to the Fed at the moment and tariffs on what Trump is doing and saying, that's where key focal point is.
Yeah, and also I'd like to add on that, paying close attention to the Fed and understanding their mandate, what they're trying to achieve. They're trying to stabilize prices. They're trying to achieve maximum employment. So economic data points like your inflation data and jobs market data, I think they're still as important because of the mandate the Fed has. All right. So I would say, yeah, we're still looking into that. And the tariffs, of course, Trump is volatile. He can just say new tariffs now,
Yeah.
So yeah.
I also want to add something to those 2 points, right? I do think that we are heavily political for now, and it's actually really just bombarding and skewing the economics in a way where it's like, what is happening? So it's, for me, it's very political. I think for the next quarter at least, we're going to see just too much of him politically, because it's all about territory. I mean, remember we mentioned in the beginning Greenland, and then he goes to Davos and he says, we're a great country and we're not going to take it by force. I mean, just to make a statement like that to the world.
By force.
By force.
But we're going to take...
We won't use any military action. Please don't quote all my words here, guys. You can go and check out that specific speech.
Yeah.
But he said it. He's not going to pursue any violence. But for the mere fact that he could say it on that global stage tells you that there's a big agenda behind it, because you won't just prepare a speech like that and there's nothing behind it. So politically, I would look at what's happening in the headlines for now, at least the first quarter of 2026.
Sure.
And for you, Brandon, any closing outlook going ahead?
Closing outlooks. I think we just have to watch the market first. What happens on the traditional side is very different to what happens on the crypto side.
Sure, yeah.
I think that we could be in the bear cycle right now in terms of crypto markets. And I think it's important to watch what happens with rate cuts, what happens with ETF inflows. And it's very important to realize that that's on a pure profit trading perspective. But let's look at the real winners and losers. And this is where I think 2026 could be going. I think the West could be losing in terms of cryptocurrency from a pure trading perspective. But I think Africa is fully in the bull right now. I think not only are we going to see an increased number of wallet users happening across the African continent, I think we're going to see higher volumes in terms of stablecoin usage. And I think we're going to see higher volumes in terms of non-US based denominated stablecoins like ZARC.
Brendan, you see, now you're going into another discussion, bro, because you literally leaped on. And I'm saying that's a very meaningful talk. If we could go into the African side of it, that would be.
But you know what? I mean, that's the thing, is people watching this, they want to see what's going to happen in Africa, because that is the next frontier, right?
Next frontier.
It's the emerging market. It's why people throw so much money into this place. Yes, it's not the kind of capital that Vanguard, State Street, and BlackRock are sitting on, but there's still serious capital there to be allocated.
Yeah. Sure.
And how is that going to boost innovation? How is that going to boost employment? How is that going to boost our own internal fiscal policies here, not only in South Africa, but across the African continent?
Do you think there's a likelihood that banks would start launching their own exchanges? So
this is what I love about South Africa specifically, is that banks cannot get issued with crypto asset service provider licenses yet. Because then, they've got all the capital, they've got all the clients because they are on their databases. And as soon as you give them
system, isn't it? So it's just a movement from system,
exactly.
from that system to the system.
And they'll just monopolize it, throw a whole bunch of money into it, and they're actually killing the innovation that's coming out within the space, because they'll create service providing products geared towards their traditional systems that's not going to cause an upheaval of their books, right? So I love it. I love that the FSCA has not given banks crypto asset service provider licenses, but I love that banks now have to get involved with the likes of us at TE Markets Exchange to figure out how we are issuing out products and services and how they can still custody it from a first and a last mile perspective. I think that's important, where we have that collaboration. But this is our space. This is our industry. Banking and traditional financial services. We don't come and get involved in your game. You don't come and get involved in our game. Yeah. But there is synergy between us, and we are seeing that point of inflection coming. That's my opinion.
On stable coins, I know it's another topic.
Yeah.
But did you guys see in the UAE, there's a new stable coin in the UAE, a dollar-pegged stable coin called USDU.
Yeah. So funny enough about the UAE, their currency is already pegged to the dollar anyways. So $1 equals 3.675 dirham. Exactly. Yeah. Pegged, fixed by their central bank. So to have a UAE-based stable coin that's dollar pegged kind of makes sense from a central bank perspective, because they're already pegged. So it actually wouldn't create a huge upheaval, but yet again, it's another pivotal innovation point that the UAE is happy to come forward with. Is they say, listen, we know that having a dollarized and pegged UAE dirham-based stablecoin will attract more inflows into the country, not only for tax purposes, but for family structuring purposes, business purposes. So it's all with their greater macro vision of attracting wealth, attracting capital, and more importantly, attracting skills into their country.
Well, I don't know about you guys, but I am definitely looking forward to promoting and actually making use of South Africa's first digital asset, the ZARC. You know,
On the Stellar network. First digital asset on the Stellar network.
percent, which is supposed to serve as, you know, Africa's gateway into the decentralized economy.
Yeah.
Look out for that, guys, the ZARC. And
ZARC.
fantastic insights from you all. And thank you for breaking down not only what's happening, but also how these markets are interconnected. And
I was thinking, you know what, I wanted to add one more, man, but it's okay.
No, just go one more. Just one more. Just go one more.
One more.
well, you will have to start tuning in for the next time. And thank you everyone for tuning in.
So, guys, if you like this, let us know if we should film a version 2.
Yes.
And let us know if we should, for the South Africans, ons sal kak praat, of, if we should actually just get a little bit more into the details.
Yeah, and do a deep dive
Do a
into
deep-
South Africa's digital assets.
Especially the African continents talk. That thing.
Yes, sticking more to South Africa and how it relates to retail and institutional investors. you know.
Yes.
It's an exciting time. I'd say 2026 is kicked off with a bang. Thank you all for tuning in. Stay
Thanks,
informed,
T-Bang.
guys.
Thank you, T-Bag.
Yeah,
You've been a
stay
great
well.
moderator, bro. I have to say, I appreciate
Yeah,
it.
this was supposed to be moderated led.
What do you guys
Next
think?
time.
Put in the comment section.
Exactly. You know, next time when we do a deeper dive into the markets, we will then focus also on Africa, South Africa,
Yeah.
and also the stable coin that we just talked about, the ZAR. So, thanks everyone.
So, and last thing, guys, also comment how fire the suits in the comment section. Just put, are the gents looking
The
clean?
economist. The
Okay.
economist.
Cheers, guys.